All right, with the holidays coming up, who couldn't use some extra money? So today, we're continuing our hunt for good dividend stocks.
No pun intended.
We're discussing another monthly paying dividend stock in the REIT category. Before I ever learned anything about the market or stocks, I would always wonder why most of the monthly paying dividend stocks are in the REIT sector. But that was before I knew that these companies are required by law to pay out 90% of their earnings to their shareholders. Makes sense now, right? We've already covered two other monthly paying dividend stocks in AGNC and PSEC. So if you haven't watched those videos, I'd recommend it. But today, we're talking about another stock that has made the monthly paying dividend list. Ticker symbol GOOD. And before we delve into the stock itself, I want to highlight something else I mentioned a few days ago in another video about REITs. If you believe it to be true that we are in fact headed for an official upcoming recession, then REITs are one of the sectors of the market that stand to be impacted the most, depending on the type of real estate that company is invested in. I'm going to read a little bit from this article on Seeking Alpha that talks about how REITs are affected in a recession. It says, normally during recessions, commercial real estate occupancy declines. Corporate bond yields spike. REITs interest expenses rise. Tenants default or fall behind on rent, and rent rates decline or at least slow their growth. It also says that moreover, as existing debt is steadily refinanced at higher rates, REITs interest expenses will steadily rise, eating into cash flows. So not only will future investments be less profitable, but the existing portfolio will also deliver less to the bottom line. So this is why it's important to look at everything in totality and not just the fundamentals of a stock. We need to also consider the economic climate that we're in and how it affects our investments going forward. All that said, would I invest in this stock if I were new to dividend investing? Probably not. Here's why. The state of the economy alone might serve as a big red flag. But we don't have to hypothetical this one out, because I already have invested in good. Moment of transparency here. During the beginning of my stock market journey, and before I bought this stock, I had all kinds of red flags and warnings that I ignored. And still, I was just like,
it pays monthly.
Give it to me.
Yeah, well, as you can see, that shit didn't really work out now, did it? Look, I've lost about 11% of my investment into Gladstone commercial, which all things considered is terrible because I could have avoided this L totally and completely. But let's look a little bit more into the juicy bits. This is a small cap company sitting at 691 million. PE ratio is at 860, which is extremely high. This hints at this company being overvalued, and keep in mind, this is even after the drop off from its year-to-date highs of $24. The dividend yield is a whopping 8.75%, which comes out to about 12.5 cents per share currently. Looking at their dividend history, it looks like they haven't raised their dividend much at all since their inception, maybe 2 or 3 times since 2003. Over on the max chart, you can see this stock has mostly traded sideways. No real growth since its conception, which isn't shocking for a REIT, but I still typically like to see a trending graph going upwards, showing that you are still making revenue over time. We're not seeing that here. And one of the things I talk about with REITs like this that I believe is one of the most important keys is your cost basis or price to entry. The lower that number is, the better position you're in to hedge against those red days. So if you're willing to trade upside growth potential for a high monthly dividend payout and risk being more exposed to the volatility of a possible recession due to this stock being a REIT, then this may be a buy for you. If I were to give my opinion right now, going forward, I plan to sell all of my holdings in good. Okay, I do. And I'm doing that because I found another monthly paying dividend stock that I think will perform better in the long run for a couple of reasons that I will discuss in the next video. So make sure you guys come back for that. It's going to be another monthly paying dividend REIT that I'm going to be investing in that I think will outperform good over time. Make sure you come back for that. Make sure you stay tapped in. those are my thoughts. Tell me yours in the comments. Let me know if you're investing in good. Let me know what your favorite dividend stock is. And remember to invest diligently, but more importantly, invest responsibly. And let's go get this money, y'all. We need a little bit extra to buy those groceries this year. I know I do. Later.